Bitcoin threatens to remove $22,000 as support as BTC price suffers against a booming DXY. Bitcoin, BTC, fell to 3-week lows on March 8 as stronger than expected employment data from the United States dampened risk assets. Data from Cointelegraph Markets Pro and TradingView showed BTC, USD dipping to $21,858 on Bitstamp. The pair was attempting to preserve $22,000 as support at the time of writing, with traders' downside targets still a way off at $21,300. Bitcoin not showing the strength I initially wanted to see, slight bounce yesterday taking place, Cointelegraph contributor Michael van der Poppe, founder and CEO of trading firm 8, summarized. In that case, looking for some more downwards momentum towards a sweep of the lows at $21,200 before a bounce takes place. If we want $30,000, flip $23,000 is necessary. Fellow trading account Down Crypto Trades meanwhile argued that volatility was due thanks to movements in Bitcoin futures markets. Massive bid depth on the Binance futures pair, combined with quite the ramp-up in open interest, he revealed on the day. Keep in mind that walls can be deceptive where they can be pulled at any moment. Feels like a bigger move is coming regardless of direction. Macro events offered mixed results when it came to moving crypto markets. An appearance by Jerome Powell, chair of the Federal Reserve, before the U.S. Congress the day prior failed to spark a reaction, but jobs data on the day sent the mood downhill. The expectations were 197K in employed people. The actual number is 242K, which is more positive than expected, Van der Poppe wrote in part of comments on the day's non-farm employment increases. For risk-on investors, not great, as we've just heard that Powell wants to increase interest rates more in 2023. Such hot employment figures traditionally unsettle risk assets as they imply that the Fed has more leeway to keep financial conditions tighter for longer. Estimates on how far the Fed would hike at the next meeting of its Federal Open Market Committee, FOMC, on March 22 evidence the increasing uncertainty over declining inflation. Instead of 25 basis points as in February, the market now favored a larger 50 basis point rate hike, according to data from CME Group's FedWatch tool. The US dollar index, DXY, likewise held a potential unwelcome surprise in store for Bitcoin bulls. After a strong session March 7, the index consolidation on the day after hitting 105.88, its highest level since December 1, 2022. Watch the DXY, there's a near-perfect setup for a negatively divergent high above 106, then at least a big pullback, or the dump below 100 has begun, investor David Brady reacted. The views, thoughts and opinions expressed here are the authors alone and do not necessarily reflect or represent the views and opinions of Cointelegraph.